If you're a homeowner or a home buyer in Danville, California, then this is the video for you. If you're listening to or reading the news, it's plagued with lots of dramatic headlines about the real estate market. So the focus of my talk with you today is to provide you with solid facts. So hit the like, subscribe, and notifications bell to join me on this excursion of the market as it adjusts. I've seen the real estate market go up and I've seen the real estate market go down. So today I'm going to share with you some of the simple facts that I collected from reputable resources. I'm going to list them all the resources down below in the comments section. All right, let's get into it. So before we get local, we need to understand the national news and economics. So 4 key points here. Stock market, okay, with the S&P down 23% year to date, NASDAQ down 32% year to date, and crypto down about 52%. Those of you who are in these markets, you really don't need me to tell you and to rub it in. You can just turn on the news for that. Okay, point number 2, inflation. Whether you're buying a gallon of milk or a gallon of gas or even a new home, you're more than likely feeling the effects of inflation. And so we're starting to see fewer people buying homes. Number 3, recession. With talks of a recession hitting, it's really important to understand that recession doesn't always equal housing crisis. So the chart here shows the last 6 recessions, and you can see that there's only been a major impact on the housing market in 2008 when the recession was actually caused by the housing crisis and the mortgage meltdown. All the other recessions had limited impact, like in 1991, or no impact at all, and half of them, we actually saw the home prices grow a rather healthy amount, about 3 to 6%. And the 4th and last point is the economic news. Interest rates, you may or may not have heard that the Feds just met and raised the prime lending rate by about 0.75%. This, by the way, does not mean that mortgage rates are going up by that amount, since this increase was already cooked into the mortgage rates that we're seeing today. I get asked often about the future of rates and whether or not I think they're going to continue to climb. Look, I don't have a crystal ball and mine broke quite a while ago, but I can tell you that I don't expect rates to go as high as 7%, and I feel that they're close to or just at their plateau. So the question is, how does this national economic news impact our local market statistics right here in Danville, California? Being that we're at the center of the high-tech industry, the differences between local and national trends are generally more of a difference in degree rather than direction. So let's talk numbers. Today I'm focused on 7 key data points for single-family homes in Danville, California. I'm going to share with you the most recent data that I have, which is for May 2022. I'm going to compare it to May 2021, and I'm also going to compare it to last month, April 22, so you can see year over year and month over month. Okay, so here are the 7 local data points. 1, volume of homes sold. In Danville in May 2022, we had 69 single-family homes sell, which is down substantially from May 2021. We had 106 homes sell. That's almost a third less homes, but it is up slightly from 68 homes sold in April 2022. Number 2, the median sale price. In May 2022, we saw 2.453 as the median sale price. This was down about 1.9% since April 2022, which was 2.5 million. But yet it was still up 29% since May 2021 when the median sale price was 1.9 million. Okay, number 3, let's look at inventory. We have a lot more homes on the market now than we did either last year or even last month. May 2022 brought 81 homes for sale. April was only 61 homes, and May 2021 was only 45 homes. So we have almost double the amount of homes for sale now than we did a year ago in May. Next is days on market. The median days on market, super boring. 7 days in May, April, as well as last May. Pretty boring, right? It's been rather flat, and I'd be willing to bet you that when I see you again next month to report the numbers for June, this is going to change significantly. Okay, what about months of inventory? The months of inventory is defined by how long it would take for the current level of demand to absorb all of the homes that are currently on the market if no new homes came on the market. Okay, so for May of 2021, it was an astounding 0.4 months of inventory, not even a month. April 22 was 0.9 months of inventory, and then May 2022 was 1.2 months of inventory. And due to the decrease in demand, I'd expect to see this number go up again, along with the days on market next month when we talk. Okay, what about pending contracts? These are homes that are currently in escrow but haven't closed yet. As this climate continues to change, this number is going to better reflect the actual timelier impact of higher mortgage rates, more so than closed home sales. Okay, May of 2022 was 69 homes, slightly down from 70 homes last month in April, and drastically down 37% from 109 homes in May of 2021. Okay, our last key indicating factor is the number of homes sold with a price reduction. In May of 2022, we had 1 price reduction. In April was 0, and May of 2021 was 2 homes. I think that's an anomaly, but I think that we're going to see significantly more price reductions in order to sell homes in June of 2022. So what these numbers are telling me is that sales are declining and the number of active listings and price reductions are increasing as well. But the homes that are selling are still usually selling fairly quickly and for well over asking price. The median sale prices and year-over-year appreciation rates remain high. Now, when an overheated market cools, the change is typically gradual, assuming there's no major disaster or anything. So it doesn't mean the market is weak by any normal standard. As an analogy, if the traffic's going 120 miles an hour, and then all of a sudden it drops down to 75 miles an hour, it feels a lot slower, but it certainly cannot reasonably be called slow. After 2 years of scorching demand, it may be difficult to remember what a normal market feels like. But people will continue to have excellent personal and financial reasons to buy and sell homes in Danville as well as the entire East Bay. As of late spring, across the Bay Area, less expensive home sales have generally been considerably more impacted by rising interest rates. Sales of higher priced homes have held up much better, but the cooling demand is beginning to show up in the pending contracts data. Affluent buyers tend to be more affected by financial markets, which became very volatile in May this year. Market changes are often uneven in the early months of a transition, with one home maybe selling in days with 25% over list price, while next door, maybe the seller has to reduce their price just to get one offer. Now, in this new market, not every home will sell. So I'm going to give you some advice. Whether you're selling or you're looking to buy, do me a favor. If you find this information helpful, just hit the like button, subscribe, and don't forget to hit the notification bell so I can update you once I have these new numbers for the coming months. And I think it's safe to say that our market will be coming down to a pre-pandemic level in all terms: pricing, volume, and the number of homes that sell, as well as the demand. So here's my advice. Buyers out there, if you're considering buying a home, the opportunity I see for you right now is that you no longer have to sell your first child to get a home. No, seriously. Buyers won't be asked to give up as much as you did in the past couple of years. So yes, you can be a little bit more discriminating, and obviously this will change as the market changes in the coming months. So just make sure that you get updated with all the numbers and the facts as you decide to write an offer so that you know what's exactly market appropriate to offer and to ask for. Okay, sellers out there, being that there are fewer buyers in the market, and since the mortgage rates have increased so significantly, this has made affordability go down, and it has actually shrunk the buyer pool that's coming to take a look at your house. So if you're thinking about selling your home, the challenge that I see for you right now is that the 2 most important things that you can do for yourself are: 1, to price your home correctly. This is even more important than ever before. And you've got to price your home based on what tomorrow's pricing expectations will be, and not so much what homes are selling for today. Think about it. If prices are going down, even if it's only by a little bit, and you stick your heels in the sand at what was yesterday's pricing, guess what? You're going to miss the market. Okay, 2, sellers, make sure your home's condition is absolutely impeccable. This is going to be more important than ever before in the changing market. Buyers are looking for that perfect home, and they have a lot more to choose from. So if only some of the homes that are coming on the market are about to sell, don't you want yours to be one of them? If you have any questions, just post it down below in the comments section. If you want to talk about the market, just click the link down below to set up a free consultation on Calendly. And if you're looking for information on a certain neighborhood, Just reach out to us at exploreeastbayhomes.com.